Hello and welcome to Business Africa with me, Ronald Kato. This week, it may be a flattering moment for oil producers globally, but Angola is looking beyond the resource. The country wants to be known for being a magnet for private investment. We take you inside Angola's plan to reduce dependency on oil. Plus, can Ghana avert a debt crisis? The West African country's debt portfolio is rising fast, but growth isn't keeping up. Rising interest rates, inflation, and a weak cedi have left businesses counting losses. Also, after a slow start due to the coronavirus pandemic, trading under the African Continental Free Trade Area picks up pace. The African Union says East African countries lead the rest in domesticating the world's single biggest trading bloc. Stay with us for the details. Thank you for joining us. Angola depends on oil for a third of its GDP. Crude also makes up 95% of Angola's exports. This dependency is why the country fell into a 5-year-long recession when oil prices plummeted. The boom times are back thanks to the war in Ukraine, but Luanda has learned that betting on oil alone is not a smart idea. Angola's leaders are looking to agriculture and private investment to power future growth.
For years, oil has been the engine powering Angola's economy. The Southern African country sells pretty much nothing else. Higher oil prices in 2022 have helped the country reduce public debt to 56.5% of gross domestic product in 2022, down from 79.7% in 2021 and 123.8% in 2020. The country made $2.1 billion from crude sales in May alone, but Luanda has been here before and knows that good times never last. In 2021, Angola exited a long recession brought about by nearly 5 years of low crude prices. A recent World Bank report puts growth this year at 3.1%. It forecasts momentum to fall slightly in 2023 before stabilizing at 2.9% in 2024. The authorities have been trying to direct investments in sectors such as agriculture and manufacturing in a bid to cut Angola's overreliance on oil. Africa's top oil producer since June after toppling Nigeria, Angola knows that sustainable growth will come not from oil, but rather cutting the resource's oversized influence on the economy.
My guest is Antonio Silva. He's the head of Angola's investment and exports agency, IPEX. Thank you so much, sir, for your time. Angola emerged from a recession in 2021. What away from oil are you looking at to drive growth going forward?
We think that FDI plays an important role. But besides that, we need to also look into our integration in the region and how, because of the geostrategic location, because of the infrastructure that's already in place and the one that's been planning to be built in the country, we could bridge with the other countries in the region so that Angola could both benefit by creation of new jobs, but also Angola will be able to foster some of the existing potentials in those countries into our region and through Angola to export with a value add. So instead of exporting some of the raw materials that are coming from mineral raw materials that are coming from those countries, if we do manage to either in the value chain bring some value add into the country, that will again create a positive cycle of value-adding elements that we believe will get our own economy stronger, but also will enable our neighbors like DRC, like Zambia, to close the gap that is existing one by exporting raw materials as they are.
The calls to diversify have been growing louder for obvious reasons. How is the dive into agriculture shaping up?
Well, if you look at the potential of agriculture in a country that has more than roughly around 50 million hectares of arable land, that's huge. Out of those 50 million hectares, only 15% are being in use, which is still very low. So there's plenty of room to improve in that regards. And if we consider the current crisis, global crisis in food supply, where we can predict a switch from who has been supplying some of the very, let's say, common crops like wheat in the world, that we can see producers from Africa start going that way. Of course, Angola could also play an important role, and this is why our government, both from an internal consumer need, also for exports, we could play a major role in adding, just like Ethiopia has been showing some results into agriculture, developing, and plus also agribusiness and manufacturing could also be a strong point to add on what Angola has to offer.
Talk about the drive to privatize state parastatals. It is a move backed by the IMF too. A few have been sold, but the big ones, such as Sonangol, remain. What's their fate?
The value of Sonangol within a sector that has been shifting from this paradigm from pure oil-based one to one where renewables are taking in account, where an asset that was owned by Sonangol, which is called Biocom, with biofuels, were also meant to be privatized. And now we slow that intention because the market is showing some value add in terms of how that same asset could be sold out there. Of course, we're not going to sell it. So the dynamics of the markets and the financial value add that we are expecting, if it's raising, we need to reanalyze if it's the right momentum to go further on with the giving away the asset.
Antonio, what is your strategy to tap into the opportunities offered by the Continental Free Trade Area?
The integration within the regional borders with the countries that Angola is bordering with the creation of conditions to easy of intertrade between the countries, which is also something that for decades has been challenging Africa as a whole, and Angola will not be an exception. And through that, we believe that if those channels and if those routes, trade routes, are going to be open and it's going to be much easier to do business between neighbors, of course, we will all be able to better perform and to create better conditions of living for our citizens.
Antonio Enriquez da Silva, thank you very much for your time.
Thank you. Thank you very much for having me. Thank you.
Now, the World Bank estimates Ghana's debt to reach 104% of its GDP by the end of this year. Ratings agencies have downgraded Ghana to junk status, effectively branding it an investment and credit risk. Peter Adatol reports now on the struggles of small businesses.
Between August 2017 and January 2020, a serious banking crisis shook Ghana. All areas of the economy, small and major industries, formal and informal sectors were heavily impacted as general cost of living quadrupled. Though the period is now far gone, poultry farming is one industry that has not recovered.
I don't think any farmer is making it, because even from last 3 months, feed has gone more than 70% increase. So if a farmer has estimated or has made a projection for 2,000 birds, by this time, the money he projected for has already finished. So that farmer has to struggle to get different money to top it up, because it's not in our plans or any farmer's plan that production or cost of feed will go very high.
There are only 2 poultry farms at Kokrobite, which used to host 14 farms in 2020. Ghana's export and import industries have been equally impacted. So, how did Ghana come to this point, and what alternatives does it have?
Our growth has not been inclusive. We have not done so much to ensure that the auxiliary activities in agriculture contribute to industrialization, manufacturing. They should manage the economy guided by a sound fiscal management processes, and they should prioritize growth-enhancing activities.
Some analysts believe that food and agricultural imports will continue to grow as the West African nation's food processing sector is unable to meet increasing demand.
Now, East African countries lead the rest in making the African Continental Free Trade Area operational, according to the bloc secretariat. Trading under the bloc has picked up pace after a start rattled by the pandemic.
Kenya, Rwanda and Tanzania have dominated the list of countries that have domesticated the Africa Continental Free Trade Area to allow the commencement of trade under the bloc. The bloc's secretariat said that so far 3 out of the 8 countries that have set the stage for trading under the Free Trade Area Agreement are from East Africa. Under the so-called Guided Trade Initiative, matchmaking is made for products and businesses seeking to trade with other businesses in state parties. Under this initiative, Kenya has exported batteries and tea to Ghana. The Africa Continental Free Trade Area is the largest single market since the creation of the World Trade Organization. Trade under the bloc kicked off in 2021, but progress has been hampered by the pandemic.
And that story wraps up this episode of Business Africa. With me, Ronald Kato. The news continues on air and online. Bye for now, and I'll see you on the next episode of Business Africa.